Good morning, everybody. This is Signet with the Bullish Bears. It is Wednesday, November 6th, 2019. It's 9 o'clock in the morning. I was taking a look at the EIA Petroleum Status Report. It's going to be coming out this morning. This is going to be an opportunity for us to trade the uh, USO ETF. We get this opportunity every Wednesday. I am going to be streaming in the day trade room today, so most of my focus is going to be on, quote, penny stocks. That would be, for me, anything less than $15. The criteria changes depending on your own interpretation of penny stocks, but USO fits that category for me. Every Wednesday, we get this opportunity. The EIA Petroleum Status Report is going to affect the price of oil in the marketplace, and we can trade that here with USO. And that's not the only product that we could use. It's just the one that I most often focus on. One of the things I like about trading USO is the fact that it correlates quite a lot with steel. So while I'm watching USO this morning, I'll also be watching steel this morning. You can see it did have earnings, so the volatility is going to be slightly crushed. USO and X steel typically have a pretty decent implied volatility, but with the earnings that came out on X steel, we might have, yeah, see, we got a little bit of a crush there, but it's still got a relatively high implied volatility. You could use a fancy indicator that perhaps could give you, quote, rank on this, but if you just go over to trade all products, jump down to option statistics, the IV percentile, which is IV rank, is 46. So it's still good enough if you want to trade options. It's still good enough. Me, I think it's for day trading, focusing on shares would be a bit more appropriate. So I'd be doing that instead. But USO is definitely one of the game plays for me this week. It's a Wednesday thing. It's something I always enjoy doing. So good morning, good morning. Don't know if you have weekly trade strategies like that. If you don't, perhaps adding USO and X Steel to your weekly trade strategies could be beneficial to you. There has been quite a bit of economic news this morning. Nothing overly drastic, of course. Uh, One of the products that I use to keep track of morning market activity is Twitter. So by using Twitter, you kind of keep track of uh, without paying. You know, if you had to pay for that kind of stuff, you have Bloomberg and Seeking Alpha and Trade Ideas, all these different uh, companies out there. You'd spend all your wins on just paying for data services. But if you just go in and monitor a couple of Twitter feeds, you can really get some heads up on what's going on. Trend Spider is a good one to follow. Uh, Dan with the Bullish Bears is another good one to follow. You can see here he posted a tweet this morning with the morning gap leaders. If you are a member of the Bullish Bears, there's also a private Bullish Bears Twitter account that posts trade alerts and trade ideas. Um, but you would only get that, of course, if you are a member of the Bullish Bears. And if you're not yet, you can stop by Bullish Bears and join up for our 14-day trial and come into the trade rooms. We have the swing trade room, which focuses on options, futures, shares, just about everything on the block. And then we have the day trade room, which mostly focuses on the penny stocks, less than $15 markets, but also does some options and intraday plays. I see Dan is still at it, throwing his uh, trade ideas out there. Although, as an insider, that looks more like a Lucian chart than it does a Dan chart. So maybe I won't say it's Dan. We'll just say somebody's active this morning on Twitter. So, use the tools to your advantage. Since we're going to be watching oil this morning, one of the things we want to keep track of is economic reports. And the best economic report that I've found yet is, gotta find it here. I don't see it popping in there. Live squawk is what I'm looking for, but I don't see it here in the news alerts. Live squawk, hands down, does the best job of getting the news out that can affect the marketplace. And it's not always an economic event. Sometimes it's somebody just talking to the media and happens to say something that makes the market wobble. Swing Trade Bot is a company that I have paid for their services. It's about $150 a year, which is really, really cheap. And their trading strategies are right in line with the way that I typically trade as a swing trader. And I really enjoy their product, but you don't even need to pay for their product just to get their Twitter feed, right? So definitely want to take advantage of that. I believe I silenced my feeds the other day, and I might have accidentally gotten rid of the live squawk. But hands down, I haven't found anything else that can do even remotely a good a job, especially for free, than live squawk. So I found that right there. Xerox has an offer to buy Hewlett Packard. That is not new. That news started coming out yesterday. But I'll be using Live Squawk to identify as soon as the oil report comes out which direction we want to play it. And then, of course, we'll go from there. But you got your non farm productivity, Fed news, or Fed talk. So live squawk, that's hands down, that's the one right there. That's it for me. All right. So what else are we going to be looking at this morning? USO, X Steel. Let's take a look at that morning gappers list that Dan had posted. Which comes from our trade alert. Um, we have a trade ideas scanner on our webpage. If you go to the bullishbears.com and you go over to trade ideas, you can see the gappers. I'll bring that up here so you can see it. Updated by 9:15 every morning. You can get your own trade ideas 15% off using a code that they had presented to us from the Bullish Bears, or you could just use the one that we stream. You can see that the date is already changed, so somebody has gotten it updated already. You got your float, short float, days to cover, PRPL. We're going to add that one to the list. And maybe PIR. Now, Purple Innovations, $7, $9. Popped up to 10. Could get a nice little play out of that today. All right, a little bit of news on LL. That's within our range. Let's see what else we got. NXTC. So we definitely have a few products to trade. You have to pardon me for a moment. I need to fire up the live stream in the day trade room. Lately, there's been some kind of issue with the audio bridge. It seems like every time I try to stream, I have to, in the day trade room, I have to start the stream, kill it, and then start it back up again. Good morning, everybody. Sound check. Check 1, 2. All right, so everybody can hear me. So good morning, everybody. A couple of products on the list: NXTC, LL, PRPL. Of course, I'm watching X Steel because it correlates with USO, and I'm watching USO because it's an oil day, and I'm looking for a pop later on in the morning. How's everybody doing? Hopefully, you had a pretty good week so far. It has definitely been a market that had direction, makes trading so much easier when we have somewhere to go. Apple's publishing some privacy features. There's a new ride hailing market in Egypt. The president's throwing out some tweets this morning. Be careful with that. With all of this going on, it never hurts to take a look at gold, silver, the precious metals. You can see that GOLD is also something worth trading or taking a look at today for some trades. I'm going to need more charts. So good morning, good morning. Let's see. Bitcoin trading volume in record numbers from BAKKT. Not much of a Bitcoin trader. Bitcoin, maybe, kinda, but getting into all the other coins, not so much. Binance Coin BNB added cipher trace tracking services, which is a good step in the right direction. Privacy protection. Microsoft is stepping up to make Facebook look bad due to their privacy violations. Smith from Microsoft is chipping his teeth this morning. Boeing is set to invest $1 billion in global safety drive, and the reason we're looking at things like Boeing, Walgreens, and a couple others like that, is because those big mega cap companies can tip the market over. Keystone Pipeline spill uh, causes some landowner opposition. Facebook got caught planning a switcheroo on data policy changes with their court filings. CVS tops profit estimates. Mitsubishi Motors slashes profit outlook. Hong Kong has new rules for cryptocurrency exchanges. If you guys didn't catch it yesterday, there was an article about Robinhood traders who were using margin, and they had like unlimited margin due to a hack that they found on Reddit. The interesting thing wasn't that they were doing it. The interesting thing was that Robinhood knew they were doing it. The only thing that I can think of about why they would let them go ahead and do it is because after they make winnings, Robinhood could step in and say, you know that you got these ill-gotten gains with unlimited margin that you weren't supposed to have. So thank you, we're going to take that. And if they failed in their trading and lost a lot of money, then Robinhood could step up and say, you know, you owe us a lot of money now, and we're going to have to put you on a payment plan to get that straightened out. By the way, after all the companies decided to go to free trading, that put pressure on Webull to finalize their options program. And they're going to be coming out here in November with options trading on Webull. So if you're sick and tired of Robinhood and you want to have a really great mobile trading platform that was specifically developed for shares anyways, and it has a paper trading account and really great fundamental analysis built into it, I highly recommend Webull over Robinhood. Let's take a peek at something a little pricier. Roku, a NASDAQ product. Just wanting to take a quick look, see where it's at. Had some earnings, but didn't really get a lot of pop out of it. Maximize this for a moment. All right. Didn't see the. I don't see a lot out of this. It is going to be an aftermarket report. I don't know what specifically has caused this fade off of the highs, especially when you correlate that with the rest of the market. Not quite in step, but pretty close. It's got a beta of 3, which would be 2 times whatever SPX moves. There's your overlay between SPY and Roku. So you can see that um, they're not quite moving in step. But remember, this is a 3 to 1. For every $1 that SPY would move, Roku would move 3. One of the best earnings data centers that I've been able to find is Earnings Whisper. Absolutely amazing. They have a really great track record on their hit and misses, but they have their free version and then they have their paid version. I don't have the paid version, but I've seen the results from their paid version, and if earnings trading is what you do, you might want to take a look at spending some money on that product. Me personally, I'd rather wait until they report and then the volatility kicks in and everything's just going crazy and then I hop on for the ride. I don't want to try to anticipate, get out the crystal ball and try to predict which way it's going to go, because there's absolutely no way that an individual retail trader like me can decipher which way their forward guidance is going to go. And then we don't know how the market's going to react. If they present that forward guidance, which might be positive, in a way that doesn't sound overly positive, then that's not going to turn out too good in the market, right? And they could take bad news, which would make you think it's going to crash, and spin it positively, and it doesn't crash, right? So forward guidance can't be anticipated. So I don't try to crystal ball that. I just try to trade the volatility afterwards. It certainly works out better. There is plenty of money left on the table after the report to be able to pull money out of the marketplace. Don't need to anticipate the move, but there are people who do a really good job at it. If you're trading on mobile, by the way, we have someone here from our community, from the Bullish Bears, who has started their own YouTube page to teach people how to use the mobile Thinkorswim device. Um, Todd is the person that I'm referring to. He normally hangs out in the swing trade room, and he has been putting together his own YouTube page to teach people how to be better able to use their mobile device. So let me find his link for you. If you trade mobile, then his his brand new YouTube page would definitely help you out. And they're nice short videos. He does a really good job. 5-minute warning, by the way. 5 minutes to the bell. Of course, now that I'm looking for it, I can't find it. So we definitely got quite a few products worth watching this morning. By the way, we were talking about trade strategies the other day, and I noticed that people will have all these indicators on their chart and not trust it to pull the trigger. Now, me personally, I don't pull the trigger because of an indicator. I use indicators to scan for products, and then I decide if I want to trade it or not. But let's just suppose that your trading strategy uses the PPS, and the PPS gives you a buy signal. And you look at it and you recognize that it's a buy signal, and then you don't trade it. If you're not going to trade the strategy, why do you have the indicator on there? Right? So I started going back and looking at the PPS, and I did it on different time frames, and I counted using the hard right edge. I counted the signals, and the win rate from the signal. And believe it or not, this thing has over an 80% win rate, depending on the time frame that you're using it on, but still, 80%, it's way more accurate than a coin toss, and it doesn't require you to mod the indicator or anything else. You get the arrow, you take the trade. Now, me personally, like I said, I don't trade based on the signal from an indicator, but if you take that signal and you combine it with the idea of price structure, then you can start to develop a trade plan. So for an example, USO was fading from the high of day, started to build support here at this previous price structure. You got a couple signals to go, and there it went. All right. So if you're going to use an indicator to trade, then use it 100%. Try to be as robotic as you can and get all the emotions out of it as you can. Me personally, I would rather use my own drawing tools, um, trend lines and Fibonacci's, things like that. I would much rather use that than than an indicator. But if you combine an indicator with those things, then you can at least know that you're taking a trade off of support with a buy signal, right? Or you're taking a trade uh, off of resistance with a sell signal, that kind of thing. You get some correlation, right? So the idea, though, is that there are a lot of really great indicators out there that can give you these signals, and yet that one and that's just one example, 80% win rate without combining it with anything. I just went through and counted the arrows, counted the signals. If you actually combine that with a trade off of support or off of resistance, you could get that win rate way higher than 80%. So, a little bit of perspective. Um, Creed gave a shout out in the room that the futures just died. We're waiting at least a good 5 minutes for price discovery, so we can jump over and take a peek at the futures. One of the things that I like to do is get some perspective on the overnight gap, or or a lack thereof. So we did gap up in the overnight in the Globex, but we had already came back down at the open. So we're not, quote, closing the gap. We're not closing the gap at all. If you're trading the QQQs, you're going to want to look left at this price structure from yesterday at around 10 o'clock. That should be the first line of support. It already broke through quite a few different levels already. All right, we're going to let that go. The 8200 should be a psychological support, but only temporary. What do we need here? Visualize. Index watch. Start with the Dow, since it's the easiest one. It's a 15-15 split, but look at the money flow. That is 2-to-1 negative money flow. Major negative money flow in the Dow. So no divergence signaled there. I do like to start with the Dow just because that's how small of a basket it is. We got a 70-30 decline in the NASDAQ 100. Look at the money flow. This is way more than a 70-30 money flow. This move to the downside in the NASDAQ. It's not, quote, trying to fill a gap or just fading from the open. This is massive negative money flow. right? From here, we can check the S&P 100. I always save the Russell for last because there's not a Russell 100, right? So it's the hardest one to analyze. Looking at this, there would be closer to a 50-50, although it is moving to a 60-40 very quick. The money flow in the S&P is positive, not negative. So even though it's a 60-40 split, there's more money flowing into the S&P than there is flowing out of the S&P. Here is our first signal of divergence, but it is turning around really quick. This is why we want to wait for some price discovery. Doesn't matter what you want to trade today. Uh, X steel or one of these products that are having earnings, it doesn't matter what you're wanting to trade. In the first 5 minutes, we got to let price discovery settle itself out. Remember that options don't trade before the bell. So everybody who wanted to do anything with their options, they're hammering on it at the open. Coffee, 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 coffee. I did see that Creed gave a shout out on Tesla puts, and we had a person in the room call out IMGN. And since we're waiting on uh, a couple of candles, we can go take a look at that. IMGN. Dropped to support and got caught at the 60. You gotta love it when price action actually pays attention to its own left side. I don't know how much that is going to hold, and it looks like it's already starting to break. Give it a little bit of perspective. I want to do this in reverse. Normally, if we would be measuring bullish with our Fibonacci, we'd go from high to low. But we want to do it in reverse, so we're going to go from low to high. So yes, I know I'm drawing it backwards. I'm deliberately drawing it backwards. To all good things, right? All right. So from the high that it attained in the pre-market, it came back down, closed the gap plus some. AGRX is another one that just got called out. With all the markets going down this morning, this one is bucking the trend and moving to the upside without an earnings report. At least I'm not seeing one posting on my charts here. $3 is going to be the first level of psychological resistance. It did make that already in the pre-market, but it gave it back again before the open. This is looking really strong. A couple of different ways to measure this would be to start with this price structure here before the gap. So right around that 275, 280 range. That'd be the first thing that I would measure. We want to give this less strength on our charts. So set the color for all the curves, darken it out, kind of a gray, gets that out of our way. This one will be deleting probably very quick. I wanted to see from this pullback, we always got to ask the question, is it a pullback or is it a change in direction? The direction was trending down. It's now moving back up. I'm looking at the 50 line, which is where it's getting hung up here at the moment. And I want to see a break and close above that 50 line, and then I'll delete this Fibonacci. Won't need it anymore. Don't need it now that we've already seen the number 296. We can hold that number. Just remember, but $3 for me would be the key. A break and close above $3. I'd be looking to do something with that. Let's step that out a little bit into the higher time frames and see what we're playing with on a grander scale. So this price structure, we had to go quite a ways out to see it. Puts us right into this. And you can see there's a lot of history here. If you're not in a trade yet, you're going to want to wait to find out if it can break through this or not. If you're not interested in waiting, you don't have to wait. Just start with a smaller share size, and then if or when it breaks through, then you can increase your share size. So start with a tighter stop and a smaller amount of shares, or uh, start with a wider stop and a smaller set of shares. The bottom of this price structure would be 265, 270. If you like the quarters the way I do, you could just use the 275. Which would put us right at the bottom of this Globex candle. It's been a while since it's been in that price range, but there is enough history here to let us know to be overly cautious at that level. If we can get a break above that $3 with some strength, it looks like $4 would be the next major resistance from the weekly candles. You're better off working with zones than you are with just lines. ARGX. I believe I posted last week an article about ARGX. Yep, I hadn't even got to the moving averages yet, but definitely the two market breadth indicators used extensively by the biggest companies out there like Investopedia, StockCharts.com, those institutional companies. It's the 50 and the 200. Most of the trading books that you could read from the 70s and the 80s and the 90s from some of the biggest names like Bollinger and Euler's often talk about the 50 and the 200. And you can see I brought this onto the chart because of somebody in the room and brought it up, and it's definitely worth mentioning. You can see where the price is struggling with that weekly 200. And if you don't go out to those larger charts, most day traders that are new don't even think about going to a weekly chart, and then they miss the opportunity to recognize where there is some resistance. The nebula is a really great indicator that I like to have on my charts. You can set it for week instead of days. And if price is not anywhere near those lines, then it won't appear. You can see that back here there's no line. And yet here you can see the 200-day. It's not a day though, it's week. The label just doesn't change. You can see the 200-week moving average right there. I love that indicator because it's nice and clean. If it's not in range of price, it just stays hidden and keeps my chart nice and clean. I love that. That's the Nebula 2. No, I don't want to remove that. I want to share that. So if you don't have the Nebula indicator, I'll post that into our chat room. And remember, if you put it on your chart and you don't see any lines, it's because price is nowhere near your indicator. So you can see that since price on AGRX is near the 200-week moving average, the line appeared. You can also add more than one. Have one set for days, one set for weeks. And yeah, you can even add a third one and set it for your intraday, say like the 2-hour or the 30-minute. There's a lot of day trading strategies that focus on the 15-minute time frame. That way you can use your MACD or your RSI from the 15, which is your anchor, and then trade that on your signal charts. So setting this indicator to a 15 or a 30-minute, whatever your anchor is, would help you from having to use multiple charts so that you don't end up looking at something like this all day long. So PRPL has faded back to this price structure here. Really want to see it hold right around that 75 cent, that 875, and get a rally or a pop back off of that. X steel coming up off the lows, pushing right against that 1325. It's not as strongly correlated with oil this morning as I would have liked, but it is still doing pretty decent. Oil is getting ready to break that $12 range. Remember, we do have the oil report coming out, and it's every Wednesday, guys. So if you want to do a little homework and go back and look at Wednesday on USO, see how the oil affected the market every Wednesday at 10:30. You can see what you could be anticipating. Gold is fading off of the high this morning. Oh, and one of the things I definitely want to mention this morning is the VIX. We were at record levels in the VIX, and I took some trades again yesterday, adding to my position. Now I was at an appointment with the wife, um, so I was on my mobile trying to use Tastyworks mobile. That thing is very frustrating. So I didn't get a fill in the spread the way I wanted, but I did get filled in my single call, which is fine because I'll end up taking that call and building it into a spread, uh, maybe a ladder or something. Look at the VIX on the daily chart, and we don't want to mess with the VVIX or the TVIX or any of that junk. Look at the VIX on the daily chart and recognize that we're at the bottom, and this thing can't go to zero. It can't because the VIX is used to price options in all kinds of markets. The XPS, the SPX, the SPY. The VIX is used to calculate options pricing in many, many markets. It cannot ever, ever, ever go to zero. But we are at historic lows, especially for this new formula that they use to calculate VIX. My trigger is 13.5. If it's lower than 13.5, I like to go long. We were less than 13 yesterday, and so I doubled down. I was already long. I went long more. Right? It cannot sustain these low levels. There will always be volatility in the marketplace, and knock on wood, I haven't lost a VIX trade yet. I really hate to keep saying that because it seems like I'm jinxing myself, but I haven't lost one yet. And the reason is painfully obvious. If you look at the daily chart, my triggers are from each direction. Go long if it breaks 13.5 to the downside, plus 60 days. And I go short if it breaks 24.5, 45 days. That's it. It's that simple. If price breaks 24.5, I go short. And I give myself 45 days to do it. If it breaks 13.5 to the downside, I go long. And I give myself 60 days to do that. Count the candles, 60 days, price will get back above that 13.5. It might not be a monster like this, but it gets back up there. So I go long again and again and again, and I go short again. And I don't even care what else is going on. If it breaks that level, go long. If it breaks this level, go short. CVS, Johnson & Johnson, there's quite a few markets this morning that this is an island. And Tom Bowlesby, I know I'm butchering his last name. He's a guy that works hand in hand with stockcharts.com. And he has a YouTube page connected with stock charts. And he did a video teaching about island reversals. This is a reversal signal, a reversal candle. Right? If you go back and look here, we had an island and it was a reversal signal. Now, this island didn't reverse, right? So there's no always, but it's a great video. If you go to YouTube and you type in island reversals, Tom Busby, poor guy, I'm butchering his name. You'll see his video on that. I don't think it's a very long video. Most of his are around 30 minutes. He does a really great job of explaining that pattern. As a trader, whether you're day trading, swing trading, futures, options, shares, doesn't matter, you should have a very strong grasp of at least 2 reversal patterns and 2 continuation patterns. Now, there are a lot of patterns out there. It's not worth your time to learn them all, trust me. But out of the hundreds that are out there, there's 8 main ones. And if you learn 2 reversals and 2 continuations and you master those, then you learn 2 more and master those. It doesn't have to be, you know, all at once. It's like that. It's like that analogy about the snake, that waits 5 months to eat and finally grabs a hold of something that's so big he chokes on it. You don't have to try to take all the data in at once. Learning things in small bites will still get you there. So silver has defined a very, very tight open range. If you're looking for a trade setup, oil or silver has developed a trade range. All we need to see now is a breakout from that range. So if you don't have a trade yet, keeping your eye on silver might give you a trade opportunity, especially when the oil news comes out. So there's your market low, there's your market high, and you do have to realize this has got a very low ATR. So, you can't expect this thing to run to the moon. But this is a very tight open range. There's a lot of compression, and the opportunity is there for a good trade. LL settled from the open, broke to the upside. It's in a nice pullback right now, nice clean pullback. Let's stretch this one out a little bit. Take a look at LL and see what we could do for a trade opportunity. Need to get a little more perspective. So on the larger time frame, we're looking at this. If we look left, we've got pivot points here from June, May and June, right around there. So there is some resistance. All of this from 975 to 925, there's a lot of cluttered resistance. That whole 50 cents. And then looking farther left, back to the 950 here. So be aware of that range. If you're not yet in a trade, I would look to see it break this level, at least the 950, and hold. If you want to be more aggressive, then there's no reason to wait that long. You've already broke this level here at the 925. If it can find some support on that 25, build a base for its next move up, that'd be your opportunity to go long. I am seeing some chat about Roku, which is going to be uh, running its earnings tonight. We could look, remind me when I'm done with the stream, and we can look at the options and try to find some really cheap lottery plays. I don't like to trade a market before its earnings just because, like we said, we can't anticipate what is going to go on with the forward guidance. But, we could risk, say, $10 or $15 for like a 300 or 400% payout. I'll do something like that. But it's a lottery ticket, right? It's a very small risk for, a potential good reward. And I'm not willing to risk, $50 or $100 on something like that, but I'll throw $20 on the line. But I don't want to dig through the options right now while we're looking at day trading uh, penny stocks. So just remind me, guys, and we'll go take a look at that after my stream. All right, so I'm going to mute the room here for just a moment. All right, for everybody on YouTube, I'm going to be killing the stream now. Remember to come by the Bullish Bears website, sign up for our 14-day trial. You'll have access to our educational content, the swing trade room, and the day trade room, and our blogs, trade ideas, trade alerts. I look forward to seeing you there.